is widely expected that mortgage rates are going to increase as we move further into 2021 and 2022. But what exactly does that mean for you if you're planning on buying or selling a home? Hi, this is Andrew with the Andrew Smith team at eXp Realty. And exceptionally low mortgage rates are one of the things that has fueled buyer demand in our current marketplace. And that coupled with low inventory, as you know, has caused home prices to increase rapidly. But specifically looking at mortgage rates, I saw a statistic this week that kind of shocked me, to be honest with you. If we go back over and look at the last 50 years, so we go back through 50 years of data and we average out the mortgage rate for that entire 50 years, and I'm talking a 30-year fixed rate loan here, it's 7.76%. So over the last 50 years, the average 30-year fixed rate is 7.76%. So as of this recording, it's currently at 2.81%, which is higher than it has been for the last couple of months. So obviously, there is an extremely large number of home buyers that have jumped into the market to take advantage of that. And with that in mind, we know that they can't stay that low forever. And there's a lot of expectation that they are going to increase, but how much and when? And I wish I could tell you, but predicting mortgage rates is extremely difficult. They're going to be based on a few different things. The overall economy, inflation, the Fed Reserve or the Federal Reserve policy. Those are just, to name a few. But when you look at it, the one thing that has held up over all 50 years is the relationship between mortgage rates and the 10-year Treasury rate. Okay, so when we go back and look at that, in general, for almost 50 years, the spread between the 10-year Treasury rate and the 30-year mortgage rate has averaged about 1.7. Okay, so it's averaged 1.7, the difference between those two rates. Okay, if we look at the 10-year rate over the past few months, going back to October, it's changed quite a bit. It's gone from 0.68 in October to 1.29 today. So you probably already seen or already heard that mortgage rates have been increasing, and this is why. So the spread between the 10-year Treasury rate and mortgage rate right now is 1.53. So we're running behind the historical spread between those two. So all the indications are that mortgage rates are going to go up. Now, I'm not talking anything crazy here. I'm not talking that we're going to be getting into rates of 4, 5, and 6%. But I do think that rates are going to go up. In fact, most of the economists out there are saying that rates should be right around 3, maybe 3.2% over the next 12 months. Okay, so they are going to go up, but they're not exactly going to go up as much as you might consider. But they will go up enough, right, to make some buyers question what they're going to do. Right? There's the psychological fact. So even though when you go back and look at that 50-year historical average mortgage rate, no matter what rates increase to in the next 12 months, we're still way below that. Psychologically, it still has the impact on people that, oh my gosh, rates are going up, rates are higher, things are less affordable. So what exactly does this mean, for you if you're planning on buying or selling? Well, from a buyer's perspective, if we look at that first, changes in the mortgage rate directly impact how much your mortgage payment is going to be, obviously. Higher the rate, the higher the interest is going to be, so the higher your mortgage payment is going to be. But more than that, it affects how much home you can buy. So if rates were to increase a full percentage point, a 1% increase in the interest rate can lower the amount you're approved for by 10%. So think about that for a minute. If rates were to go up a full percent, not only is the monthly payment going to be higher, but the amount you're pre-approved to buy, all else being equal, decreases by 10%. So when you're in a market with limited inventory and rising prices, the amount of homes that you actually are qualified to buy and you can look at starts to shrink. That will obviously have an impact on demand, which brings me to sellers. If you've been considering selling your home, why might you want to put the house up for sale sooner rather than later? Well, it goes back to the buyers. Prices go up when demand is high, supply and demand. It is widely expected, we're already seeing it here in Frisco and Prosper, that the number of listings going onto the market is starting to increase. There's been an uptick. So as those number of homes start to come onto the market, that means there's going to be more competition amongst sellers for the buyers. Now, don't get me wrong, right now it's still very in favor of sellers over buyers, but play this out. The interest rate starts going up, which it's expected to. The amount of home a buyer can afford goes down. The monthly payment goes up. So the amount of competition amongst buyers for your house starts to fall. Right. And the vast majority of sellers that I've ever met with, they've got two main objectives. And yes, there's more reasons why people sell, but the two common reasons, the objectives, is they want to sell for the highest amount of money in the shortest amount of time. The market we're in right now with the inventory satisfies both of those. You are going to sell for the highest amount of money in the shortest amount of time. If more homes start to come onto the market and the interest rate starts to go up, then the number of buyers per home is going to go down. Less competition is going to mean that you might not get quite as much money as you would in the market now. I'm not saying you should try and time the market by any stretch of the imagination. But if your objective is highest price, shortest time, the market we're in right now will allow you to do that. Down the road, I don't know. Obviously, the best time to buy and sell a home for anybody is when it's the right time for them to buy and sell, not trying to second guess the market or any other factor like that. It's usually something else that is the driving factor behind people's buy and sell decision. So hopefully that helps a little bit, talking about the correlation there on interest rates, mortgage rates specifically, and the impact they're going to have on the market for buyers and sellers. So hopefully you found this useful. If you've got specific questions that you have about your situation you want to talk through, I'd love to hear from you. I've got a link right below where you can go ahead and schedule a 30-minute call with me. No cost, no obligation, just happy to talk through your specific situation and see if there's any way I can help you put together the plan that's right for you and your family.